You're holding $100 bill. It's real, it's yours, and right now, it represents the most important decision of your financial life. What comes next? Welcome to a journey through every level of investing. From that first $100 all the way to managing billions you'll never actually own. If you want to build real wealth and understand how money actually works at every stage, stick around. Investing isn't some exclusive club. It starts exactly where you are right now. That $100 sitting in your hand, it's not about the amount. It's about the decision to make it work for you instead of just spending it. Most people never take this step. They stay broke because they never start. But you're different. You're thinking about this. You're already ahead of 95% of people who will never invest a single dollar. Please subscribe to this channel so you don't miss the insights that will change your financial future. The first level is understanding compound interest. This is where real wealth begins. When you invest that $100 and it earns $5 in a year, you now have $105. Next year, you don't just earn $5 on the original 100, you earn $5.25 on the 105. It's small, but it compounds. Over 20 years, that $100 at 10% annual returns becomes $673. That's the magic. That's the foundation. Time plus compound interest equals wealth. There's no secret formula, there's no trick, it's just math. And the math always wins if you're patient. Level 2 is diversification. You can't put all $100 into one stock. You can't put all your money into one investment vehicle. This is where most beginner investors fail. They get lucky once, think they're geniuses, then lose everything on the next bet. Real investors spread their risk. They use index funds. They use ETFs. They build a portfolio that doesn't rely on any single company to make them rich. When one investment goes down, another stays stable or goes up. This is how you sleep at night. This is how you survive market downturns. By level 3, you're managing $10,000. This is where your behavior starts mattering more than your strategy. You can have the perfect portfolio, but if you panic sell during a crash, you've locked in your losses. The best investors develop emotional discipline. They ignore the news, they ignore the noise, they stick to their plan. They know that the market will have bad years. They know that crashes are buying opportunities, not exit signs. This is the hardest part for most people. It's not knowing what to buy. It's having the guts to hold it when everything feels wrong. Level 4 brings you to $50,000. You're realizing that the government takes a piece of every gain. You start understanding tax-advantaged accounts. You open a traditional IRA or a Roth IRA. You max out your 401k at work. These accounts are designed to let your money compound without being taxed every single year. A Roth IRA grows completely tax-free if you follow the rules. A 401k lets you contribute pre-tax dollars, which means you're investing money you haven't even paid taxes on yet. At this level, you're no longer just investing, you're optimizing. Level 5 is $100,000. This is where you become serious about your asset allocation. You're not just picking random stocks anymore. You're asking, should I be 80% stocks and 20% bonds? Should I be 50-50? Should I add real estate? Should I add commodities? At this level, you're thinking in decades. You're thinking about what you want your life to look like in 30 years. You're designing a portfolio that matches your risk tolerance and your timeline. You're building a real plan instead of just guessing. Level 6 brings you to $500,000. Now you can hire a financial advisor. Not some random guy at a bank who's trying to sell you products that make him commission. A real fiduciary advisor who is legally obligated to act in your best interest. This person helps you navigate tax strategies you didn't know existed. They help you coordinate your investments across all your accounts. They help you plan for retirement. They help you think about estate planning. At this level, your time is more valuable than learning everything yourself. You outsource the expertise. Level 7 is $1 million. Congratulations, you're officially wealthy. But here's the truth most millionaires won't tell you. It took a long time to get here. The first million took longer to earn than the second million will. Compound interest is now doing most of the work for you. If you have $1 million earning 8% a year, that's $80,000. That's more than the median American household income. You're generating income from assets. You're not trading time for money anymore. Or at least not as much. This is the point where everything changes psychologically. At level 8, you're managing $5 million. Now you're thinking about generational wealth. You're thinking about trusts. You're thinking about how to pass money to your children in a way that doesn't make them dependent or lazy. You're thinking about charitable giving. You're thinking about legacy. At this level, making more money isn't the goal anymore. The goal is protecting what you have and directing it toward your values. You're working with estate attorneys and tax specialists. You're thinking about things most people never consider. Level 9 is $25 million. Now you're thinking about private equity and hedge funds. These aren't available to average investors. These require a minimum investment of $100,000 or more. These are where wealthy people put their money to generate returns that beat the market. Not all of them do, but the best ones do. You're now in a world where you can invest directly in businesses. You can invest in real estate development projects. You can invest in private infrastructure. You're no longer limited to public stocks and bonds. Level 10 is $100 million. At this level, you're not investing. You're starting your own fund or buying entire companies. You're becoming a venture capitalist or a private equity investor yourself. You're influencing markets instead of just participating in them. You're making decisions that affect thousands of employees and millions of customers. The game has completely changed. This isn't about returns anymore. This is about power and influence. But here's what's important to understand. Managing billions you'll never own. The wealthiest people on earth often manage money they didn't accumulate themselves. A hedge fund manager with $30 billion under management might only own $100 million of that personally. The other $29.9 billion belongs to other wealthy people who hired them to invest it. This is the final level. This is where professional money management lives. These people are managing capital on a scale most humans can't comprehend. They're making bets that move entire markets. They're influencing government policy. They're shaping the global economy. Think about that for a moment. The people managing the most money in the world don't own most of it. They're stewards. They're custodians. They make their billions by taking a small percentage of other people's billions. A 2% management fee on $100 billion is $2 billion a year. A 20% performance fee on $10 billion in gains is $2 billion. This is how you get truly rich at the highest level. You don't need to own the company. You just need to manage it skillfully. So where are you right now? Are you at level 1 with your first $100? Are you at level 3 with $10,000? Are you at level 5 with $100,000? Are you at level 6 with $500,000? No matter where you are, the principle is the same. You need to start, you need to be consistent, you need to be patient, you need to understand that wealth isn't built in a day. It's built brick by brick, year by year, decade by decade. Here's what separates people who get rich from people who stay broke. Poor people think in weeks, middle-class people think in years, rich people think in decades. A $100 investment today, left alone for 30 years at 12% annual returns, becomes $30,000. That's not luck, that's time and compound interest. If you wait 10 years to start, that $100 only becomes $6,000. You lose 80% of the potential gain just by waiting. This is why starting now, today, with whatever you have, is so critical. The second thing that separates rich people is they understand opportunity cost. Every dollar you spend is a dollar you can't invest. Every dollar you can't invest is money that won't compound. This doesn't mean you should live like a miser. It means you should be intentional. You should ask yourself if that $5 coffee is worth $20,000 in 30 years. It is if you really need it. It's not if you're just being lazy. This is the mental game of wealth building. It's not about deprivation. It's about priorities. The third thing is they educate themselves. They read books about investing. They listen to podcasts. They learn from people who've already made the journey they're trying to take. They don't pretend to know everything. They're humble about what they don't know. They ask questions. They understand macroeconomics. They understand microeconomics. They understand human psychology. They understand how their own biases cloud their judgment. This is continuous learning. The fourth thing is they take action. Knowing isn't enough. You have to do. You have to open that brokerage account. You have to buy that first index fund. You have to set up automatic monthly contributions. You have to build the habit. Most people know what they should do. They just don't do it. The gap between knowing and doing is where most people fail. Don't be most people. Don't be in that group. Now, I want to talk about the psychological journey. When you're at level 1 with $100, you're not thinking about billions. You're thinking about not losing it. You're nervous. You're wondering if you're doing it right. This is normal, but at this stage, the odds are in your favor. You can't lose it all unless you do something incredibly stupid. Most diversified investments go up over time. When you get to level 3 with $10,000, you start having confidence. You can see that it's actually working. You've earned some gains. You're starting to believe that this thing called investing actually works. This is where you get dangerous. This is where people start thinking they can beat the market. They start picking individual stocks. They start thinking they're smarter than everyone else. This overconfidence leads to losses. Stay humble. Stay diversified. Stay boring. Boring wins. When you get to level 5 with 100,000, you're no longer thinking about whether investing works. You know it works. Now you're thinking about how to optimize. You're reading about asset allocation and rebalancing. You're thinking about geographical diversification. You're thinking about adding commodities or real estate. You're getting sophisticated. This is good. But remember, more complexity doesn't always mean better returns. Sometimes the simplest portfolio beats the most complicated one. When you get to level 7 with $1 million, something shifts. You start thinking about legacy. You start thinking about who you are beyond money. You start asking bigger questions. Am I happy? Am I fulfilled? Does having $1 million actually make me happier? The answer might surprise you. Studies show that beyond a certain point, more money doesn't increase happiness. It increases security. It increases options. It increases freedom. But it doesn't increase happiness. This is a critical realization. Money is a tool. It's not the goal. The goal is the life you build with that tool. When you get to level 9 and beyond, you're thinking about meaning. You're thinking about impact. You're thinking about what you want to be remembered for. Some of the wealthiest people in the world give most of their money away. They realize that the real fulfillment doesn't come from accumulation. It comes from contribution. It comes from solving problems. It comes from helping people. This is the final level of investing your wealth in the future you want to see. So let's be clear about something. The journey from $100 to $1 billion is possible, but it's not easy. It requires discipline, it requires patience, it requires education, it requires the ability to ignore short-term noise and focus on long-term direction. It requires the willingness to be boring when everyone else is excited, and excited when everyone else is terrified. It requires treating investing as a craft that you master over decades, not a get-rich-quick scheme. The good news is that the tools are available to everyone now. You can open a brokerage account in minutes. You can invest in index funds with no minimum. You can access information that used to cost thousands of dollars a year for free. You can learn from the best investors in the world on the internet. The barrier to entry is gone. The only barrier is between your ears. It's whether you believe you can do this, whether you're willing to be consistent, whether you're willing to wait. So start. Open that account. Buy that first index fund. Set up a monthly contribution. Start with whatever you can.